Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
So how do you rate it? Is it actually all bullish?
Surabhi, from my point of view, I'm always focused on what an average retail investor is getting from the market. This all-time high or the last 15 days have been good for retail investors. That, I think, is the most important part.
It was a broad rally.
It was a broad rally. Last month when we hit all-time high, we discussed that it was the most hated all-time high because people's portfolios were down 30-40% while the market was at all-time high. Now, that's not changed entirely, but it has. What has happened is that the quality of rally is really good. I mean, if you take a look at how the indices have done, the Nifty Junior has rallied 9% from July lows, and it's now gone within 6.55% of a life high. The mid-cap index is still 12.5% of its highs, and the small-cap index is about 16-17% of the life high. So, the broader market has rallied, but in broader market, it's been about, just quality stocks. And of course, a lot of stocks which came out of ASM and all, they rallied.
Some of those also
rallied. That's a different issue altogether. But the quality of rally has been good, which is a good point. You spoke about crude. For me, the only niggling worry right now is that is the market too overbought right now? The Nifty and the Bank Nifty futures are trading at massive premium. I think the Nifty futures is trading at some 36-point premium, and the Bank Nifty future is trading at over nearly 100-point premium, and this is despite actually some dividend being built in. So that's my only worry, that this market perhaps is way overbought at index level. That's not going to, of course, lead the market to fall. The market will always need a trigger. But if there's some trigger in that case, overbought position, just like, a short market, if there's a trigger, can give you some counter trend rallies. A overbought market at times, is vulnerable to a fall. But right now, you have to respect what the screen is telling you. You had that 1 day of decline and how that was bought, and the market, almost back to new highs.
I totally take your point because Anuj, I was in Kolkata over the weekend speaking to a couple of macro and market experts, and Lata, the one point that people pointed out, at least one of the people said that the fact that everything is so good, and even after some disappointing FANG earnings, the Dow has marched on, and the 1 trillion mark for Apple, sometimes these can be a harbinger of a turn. I mean, just from the point of view of big weights and headlines.
We are all still children of the GFC turmoil. So whenever we see good things, we feel there's some evil lurking. But so far, that's not happened. Yes, I mean, valuations are something that's going to make many people uncomfortable. For me, the more important problem with valuations and results is that it's coming off a low base, and a lot of FMCG guys tell you that if you normalize, if you take away last year's unusual contraction because of those GST destocking and maybe some tail effect of demon, then if you draw the line from 2013 or 14 or something, we are actually at a lower pace of growth than we were in 2011 to 2015. So that way there is headroom to catch up, and therefore the valuations may look a little worrisome. But yeah, there is no taking away from the fact that there is no other avenue of investment, and therefore the domestic mutual funds are clearly marching on towards equities.
In fact, we'll have the monthly data this time around very, very shortly. So let's see how those numbers go. Right now, let's kick off things with a look at some of the big calls that we're getting from the wise experts this morning. Sayan Mukherjee of Nomura is saying that in a challenging and uncertain macroeconomic environment, they use a bottom-up approach. He says Nomura prefers quality and specific turnaround prospects. Their key sector calls are overweight on autos, financials, gas suppliers, healthcare infrastructure. They're underweight on consumer staples, cement, oil PSUs, IT services, power and telecom. Sayan has raised the Nifty target to 11,892, says they have added Dr. Reddy's, M&M Financial and Hero Moto to their top 10 lists in place of Ashok Leyland, RIL and Shriram Transport Finance. Some interesting changes there in Nomura's portfolio.
That's a very interesting change. I mean, one would have almost expected it to be the other way around, but well. But let's look at some money market views. Pravit Brahmavatta Veracity says the rupee will remain sideways for the day. He expects the USD INR pair to trade in a range of 68.20 to 68.80 for the day. It may be uneventful for the rupee.
And let's come to the bond market now. Ajay Magnolia of Edelweiss says the bond market has mirrored the volatility in crude prices after the initial positive reaction to the monetary policy decision. He says the positive bias is expected to resume unless further pressure is imparted either by crude or by the rupee. He expects the 10-year benchmark yield to trade in a range of 7.71 to 7.79% for the day.
Okay, let's go across to Nigel then for the world view.
Well, no worries on a Friday evening. All the US markets, they ended with good gains. A couple of star performers. Apple continues its march. It ended with a gain of around 0.5% after the big returns that we have seen. And IBM, that was up nearly around 3% odd. The big focal point, given that it's the first Friday of the month, was the jobs data. That was a tad lower than what the street was working with out there, or the estimate was. But to get a true reaction, you'll always look at the dollar index. Was there weakness out there? No, there wasn't. In fact, if you take a look at it, the dollar index is holding above that 95.2 odd mark. And even in comparison to the euro, there has been some strength that we have seen in terms of the dollar. Moving to the European markets then, you had the CAC, the DAX and the FTSE, all of them did well. Result season is panning out pretty well out there. RBS, that stock ended high with a gain of around 3% on the back of strong earnings. Asian markets as well today, they're holding with good gains. Most of those markets have opened up higher. But the Chinese market, that's under some pressure. That was a relative underperformer. Now, in fact, it's moved higher. Keep an eye out on the yuan. That had moved to around 6.9. Remember, in terms of a currency weakness in the last 3 months, that one has moved from around 6.3 to 6.9. The SGX Nifty, though, is indicating a positive start.
And how, Nigel? Indicating a positive start at 11,440. So even if you took out the premium, which you said for SGX Nifty futures, even then the spot starts well over 11,400. Yes. So that's important. Okay, let's get you some more global views, because we had that all-important jobs data. So just a word on the US market, still the mother market. JP Morgan's David Kelly expects the US jobs data to deteriorate further going into next year. So now that's a warning.
We've got this ramp up in job growth, but companies are scraping the bottom of the barrel. I mean, we saw the unemployment rate for high school dropouts fell by 0.4 to 5.1%, a record low. So basically, we are running out of workers, and that may be constrained later on. But if you move the economy to about 3% growth, it does hit employment. And actually, it's an employment with a lag of about 1 or 2 quarters. So we're going to see this struggle to find workers, particularly over the next year. In July, average hourly earnings were up 2.7% year over year. That's less than inflation in June of 2.8%. And that's after a quarter in which U.S. companies saw a 27% gain in operating earnings. So companies are holding down wages. That's, it's not good for workers from that sense, but it is very good for both stocks and bonds, because it does hold down inflation and it keeps those profit margins high.
So let's now boil it down to the micros. Our entire team is standing by with a list of the top 10 stocks that you need to watch out for. Hi, guys. A good Monday morning to all of you. Lots of results to go over. But before that, Anuj, what's on your radar?
So again, Surabhi, non-index large caps is where the action is. Jubilant Foodwork, strong pickup in delivery volumes. This stock is within 3% of lifetime high, so that's something I'll be watching out for. I think PVR is going to be an interesting stock, because it had a rally on Friday, but that rally halted at 20-day moving average. So let us see if there's any follow-through. If it starts to trade above Friday's high, I think you will see massive short covering, because there are shorts in the system on this stock. 4 times jump in delivery volumes on Friday. Key would be to take out Friday's high, which I think is going to be interesting. That was somewhere around 12.09, 12.10, somewhere around there.
Okay, well, I saw Karma over the weekend, and the theatre was packed, jam-packed, and the popcorn was as expensive as it always was. Okay, well, let's get to the important results, and the most important among them was Titan. Titan, of course, came during Friday market hours, but the conference call was over the weekend. Mangalam, key takeaways?
Well, Lata, a couple of things. This quarter results were, we saw underperformance from the jewelry sector and outperformance from the watches sector. And that is what the management addressed in the con call as well. They stick to the 25% guidance for the remainder of FY19, despite saying that June was weak. So June was a miss. The remaining 3 quarters should be good. And July has been good. 70% growth in the jewelry segment is what they've seen in July, with new collections doing fairly well. The watches business, which did 18.8% margins, the company says that for the remainder of this year, they will stick to double-digit. We may not even cross 15%. So let's see how the stock goes. The brokerages have upped their target price.
Mangalam, thanks a lot for that. Rima, what about Wipro?
Well, Anuj, Wipro has settled a lawsuit with National Grid, which is a client of the company, for $75 million, which is roughly 500 crore rupees, versus National Grid's claim of $140 million plus some additional charges. So $75 million will be booked by Wipro as an additional exceptional loss below the margin line. But now, given that National Grid is a client for the company, the question is, have they cancelled their contract or MSA? And if that is the case, then there will be an additional impact on revenue and margins. But we do not have clarity on that right now.
But there'll be some impact because of the...
They will take a write-off of $75 million straight away, which the company has indicated, but that will be below the margin line, is what we suspect right now. Will there be an additional impact on revenues and margins? Because if they cancel the contract, because it's clearly reached a stage where National Grid has to file a lawsuit against Wipro, so clearly things are not great between the two. So if they cancel it, then there is an impact on revenues and margins.
Okay, all right. So Wipro is going to be in the spotlight as well. Textile stock should be on our radar, and here's why. It's because of the CNBC Awaaz exclusive. Sources are telling us that a big announcement relating to the textile sector is expected ahead of elections. Lakshman Roy has all the details.
जो मुझे सूत्रों से जानकारी मिली है उसके मुताबिक टेक्सटाइल सेक्टर के लिए 3 मोर्चे पर 3 बड़े कदम उठाने की तैयारी है। उसमें से सबसे बड़ा, सबसे पहला कदम ये होगा कि करीब 300 टेक्सटाइल प्रोडक्ट के इंपोर्ट पर इंपोर्ट ड्यूटी बढ़ा करके 20% कर दी जाएगी। उनमें से कई पर अभी 5% तो कई पर 10% की इंपोर्ट ड्यूटी लगती है। सूत्र ये बता रहे हैं कि इसको लेकर सैद्धांतिक सहमति बन गई है। वित्त मंत्री पीयूष गोयल ने इस प्रस्ताव को मंजूरी भी दे दी है। इसका औपचारिक नोटिफिकेशन जारी किया जाना बाकी है और इसी हफ्ते हो सकता है कि आज देर शाम तक ही ये औपचारिक नोटिफिकेशन सरकार जारी कर दे। दूसरा महत्वपूर्ण फैसला, एफडीआई के मोर्चे पर सरकार ढील दे सकती है। 10 तारीख को वित्त मंत्रालय, वाणिज्य मंत्रालय और कपड़ा मंत्रालय के अधिकारियों के बीच बैठक है। इस बैठक के बाद ढील देने का ऐलान किया जा सकता है। तीसरा बड़ा फैसला, टेक्सटाइल एक्सपोर्टर्स जो कि राज्य स्तर पर ड्यूटी चुकाते हैं, उसका एक तय हिस्सा केंद्र सरकार उन्हें वापस कर देती है। अब वापस करने वाले हिस्से को केंद्र सरकार बढ़ाने की तैयारी में है। यही वजह है कि सप्लीमेंट्री डिमांड फॉर ग्रांट में सरकार ने चालू कारोबारी साल के बचे हुए महीने के लिए 1500 करोड़ रुपए अतिरिक्त देने का फैसला भी लिया है। तो ये कुछ महत्वपूर्ण फैसले हैं जो टेक्सटाइल सेक्टर को बढ़ावा देने के लिए जा सकते हैं और यहां तक कि आज ही प्रधानमंत्री ने खुद टेक्सटाइल सेक्टर की समीक्षा करने के लिए एक महत्वपूर्ण बैठक भी बुलाई है। उसके बाद माना जा रहा है कि पैकेज की रूपरेखा तय कर दी जाएगी।
Okay, we'll have to look at some of the big companies. Arvind, Vardhaman Textiles, Wellspun probably, Raymond, all of these could be, in the green today. There are smaller companies like Satluj Textiles, even Bombay Rayon, not small really. All these could be benefited in anticipation that exports are going to get more lucrative and faster in terms of getting duty drawback, as well as there will be a competition, less competition from imports because the duties are benign.
Okay, well, that's something that will definitely keep textile stocks in focus. Let's move to the other names. We've got Manglam back. Numbers came out for Berger Paints. Manglam, how do they look?
Never seen numbers as in line with expectations as Berger Paints this quarter. Surabhi revenue at 1483 crore. Our poll was 1442 crores, so mild beat there. But EBITDA at 227 crores. Our poll was 224 crores, and net profit at 135 crores. Our poll was 134 crores. The mild uptick in the revenues have come in from volumes. The calculated volume growth could be anywhere between 13 to 14%. This compares with expected volume growth of 12 to 13%. However, the FMCG stocks over the last few weeks after results, they have seen some correction. So let's see how Berger pans out. But I mean, no complaints with the results.
All right, thanks a lot for that. Bunch of pharma numbers. Ekta, tell us.
Well, I'll start with Divi's Labs. Actually, Lata, a good set of numbers. It's come back to its historical margins, which was the key highlight at 35%, which was flat Q-on-Q. And this is after all of the resolution of the compliance issues that the company saw. In terms of Wockhardt as well, it was an EBITDA profit of 4.4 crores, revenue growth of 13%. So expect both these stocks to be in the green today.
Okay, expect both pharma stocks to be in green today. Nigel, what about SAIL?
Well, Anuj, in terms of SAIL, the stock had moved very swiftly from around 72 to around 80 rupees odd. Remember, in Friday's trading session, it didn't end at the high point, and that gives it a good chance to open up in the green because these numbers didn't look disappointing. Though the volumes were a tad lower than what the street would have liked of around 3.5 million tons, it came in at only around 3.3 million tons. Despite of that, the EBITDA number looked good, but it came more or less in line, 2,580 crores odd. Our poll threw up a number of around 2,550. The management says that the EBITDA per ton was at around 8,200. I've calculated that number, it's at around 7,900. So the numbers look good. The stock should open up in the green.
Okay, good numbers for SAIL finally coming through. Thanks, Nigel, for that. Let's move to Anisha, who will round up KC and Suzlon for us. Anisha?
Well, yes, Ruby, I'll start with Suzlon, wherein the numbers look disappointing. It's a top-line miss. The company reported a loss of 600 crores versus a profit last year. The management was cautious. They have withdrawn the guidance when it comes to the operational performance in FY19 and said that FY19 is going to be a challenging year. Other than that, JPVL, that is Jaiprakash Power Ventures, the auditor qualifications actually continue for the company. Though in terms of the standalone numbers, the revenue has improved steadily and the company has reported a profit versus a loss last year. In terms of KC, the margins remain strong, but the T&D segment of the company disappointed, and that is why we saw a disappointment on the top line front. Other than that, the working capital days of the company have deteriorated to 125 days versus 93 days year on year. And on the con call, they have maintained the guidance, but nonetheless expect a bit of red on that one.
All right, fair enough. Thank you very much for that, Anisha. Sonal, you have a bunch of stocks, so that's on your radar.
Yes, there are a lot of stocks on my radar today. I'll start with IDFC, where reports are suggesting that IDFC is in final stages of negotiations for selling off its broking and AMC business, and the deal is valued around 5,000 to 6,000 crore rupees. However, these are just reports, and CNBC TV18 has not independently verified them. Den Networks came up with a weak set of numbers. The margins, they contracted by 460 basis points, and losses expanded to 28 crores versus loss of 10 crores last year. Now some upgrades by CRISIL in terms of the ratings. For Rupa and Company, CRISIL upgraded the long-term rating to stable. Also for NCL Industry, CRISIL upgraded both long-term ratings and short-term ratings of the company. Expect some green on those stocks as well. Now gas stocks will also be in focus because on Friday, PNGRB announced the winners of the city gas distribution bids. So the stocks like IOCL, Adani, BPCL and GAIL will be in focus because all of them have won some bids. Back to you.
Okay, all right. Thanks, Sonal, very much for that update. Let's quickly recap our top 10 list. Well, some stocks that have a positive leaning for them this morning are Jubilant Food, PVR, Titan, Arvind, Aditya Birla Fashion, Berger Paints, Walk Hard, Divi's, SAIL, KC International, Suzlon, IDFC. Suzlon actually is a loss. We should put Suzlon on the other side of the screen. IDFC, IOC, BPCL, IGL, Rupa and NCL Industries, while stocks with the negative news flow surrounding them are Wipro and Den Networks.
Okay, with that, let's invite the first corporate on the show. It's results season, so we have plenty of them lined up for you. Majesco posted a good set of Q1 numbers. There has been a steady improvement in the margin. That's obviously due to higher contribution from cloud orders. Fareed Kazani, the Managing Director of Majesco, joins us on the phone line. Good morning, Fareed. Thank you very much for joining us. It's actually a very good improvement in margins, 8.21% from last quarter's 7.48%. And of course, a year ago, if you go, it was even in contraction mode. Can you maintain this steady improvement in margins? Should we expect more next quarter?
Yeah, if you look at the trajectory of the revenue has improved, and alongside the business on the cloud side also has seen good momentum. And as long as we keep up that trajectory and the cloud business, there will be a steady improvement in the margins going forward.
Okay. You don't want to give us a number? I mean, will it be double digits before the year is out?
So, Lata, we are aiming to kind of get to that level in few quarters. And I think, as I mentioned, there is good momentum on the top line. And hopefully we should see good business coming from cloud, where almost 9 out of the 10 deals in the US are cloud deals there.
Okay. That is also the concern, isn't it? Because your order book has shrunk to 571 crore from 606. I would assume that's because cloud orders are perhaps of shorter duration and smaller. Will this be a concern, or will you be able to garner enough orders?
No, this is not a concern at all. And Lata, you said it very correctly. It is because the new business that comes on cloud adds very less to the 12-month order backlog that we have disclosed, which is the 570 odd crores. And obviously, in the first quarter, we've had some right shifting of the business. We would see a much better order booking momentum in this quarter.
So you're saying Q2, the order momentum should pick up. Can you give us some sort of a guidance? At what sort of a run rate are you planning to maintain your order book, which right now, as you said, is 571 crores? What should we expect?
So I think it's a good level that we have already reached. And I think if we closed another 4 or 5 deals in this quarter, you could see the order backlog also moving up.
Okay. So what would that mean for your overall growth? I mean, constant currency growth for this year, the current fiscal. What's the band that you would want to target?
So, Lata, last year we actually had, we didn't have a great year. We started off last year at a very low ebb, actually. We picked up momentum. Last 4 quarters have seen very good growth quarter on quarter. If we maintain the same growth, we would see, kind of growth anywhere between 12 to 15% in rupee terms.
Okay. Now I want to come to the IBM partnership. We all thought that's a very big opportunity. But so far you've got only one deal, MetLife. That deal is nearing completion in 3 or 4 months. So do you expect new orders? What does this IBM deal mean for you? Will MetLife itself renew and give you something else?
So, Lata, the IBM deal is a much larger deal. What we are implementing in the first stage is the platform for the small markets business. And there is potentially regional and probably going forward national markets. So there will be business definitely from MetLife. On the other hand, if you look at these kind of deals, are quite big deals with large companies, and there is a decision-making with multiple stakeholders, so the sales cycles are longer. We are focusing on closing deals. There are a couple of deals in advanced stages, and I think we have a good potential to close at least another one deal in this fiscal.
So, Mr. Kazani, again, just to come back, if you could leave us with some numbers to understand, because it's a recovering business. Therefore, we were asking, you are talking about more deals, so should we expect the order book to go back to 600 odd crores? And on margins, at the end of the last quarter, you're above 8%. Can you cross 8.5%, or is this going to be the going band for the subsequent quarters this year?
So if you look at margins, we've had very steady improvement, and anywhere between 150 to 200 to 300 basis point improvement every quarter. As I mentioned, with the revenue growth we get and with the cloud business growing, there is improvement at the gross margin level, and there's an operating leverage that also kicks in. If we keep up the same momentum of the revenue growth quarter on quarter, we will see margins getting into the double-digit post the...
But Farid, will you? 21 is a damn good number in terms of growth of revenues. Will you be able to maintain that margin, that pace of growth?
So we've seen quarter-on-quarter growth, yes. Lata, and I think we have very good visibility, and at least in the next 2-3 quarters to maintain that growth rate. Yeah. We are not guiding to any specific numbers, Lata.
Sure. All right. We will look forward to the number with interest. Thank you very much, Farid Kazani, for joining us with the details of your numbers. Majesco numbers very good, both in terms of revenue and in terms of improvement in margins. We'll take a break on that note.